Are SBA loan approval rates for minority entrepreneurs a myth? Imagine trying to start a business with a dream and a plan, but facing a wall when it comes to funding. That's the reality for many Black entrepreneurs. Let's look at what the data says about SBA loan approval rates for minority business owners. Federal Reserve data shows Black-owned businesses face a 39% denial rate for small business loans. In comparison, white-owned businesses have an 18% denial rate. That means Black entrepreneurs are more than twice as likely to be turned down. Hispanic-owned businesses see a 29% denial rate, sitting between Black and white-owned businesses. When it comes to getting the full amount of funding they ask for, the gap gets even bigger. Only 16% of Black business owners received all the money they requested. Meanwhile, 35% of white business owners got the full amount. This happens even when Black applicants have similar credit profiles as white applicants. It suggests other factors are influencing approval decisions. SBA loans and lines of credit are supposed to be some of the best options for small business funding. But they have the highest denial rates, at 45%. Personal loans for business use are denied 38% of the time. Despite being designed to help entrepreneurs access capital on favorable terms, many Black business owners still find it hard to qualify. Looking at the numbers for SBA loan approvals, Black-owned businesses received only 6.5% of approved SBA loans in 2025. That's up from about 4% in 2017. While this shows some progress, it's still far below the proportion of Black entrepreneurs in the business world. The approval rate for Black business owners is just 13%, compared to 40% for white-owned businesses. Why do these disparities exist? Several reasons come into play. Credit scores are a big factor. Most lenders want scores of 640 or higher for SBA 7A loans and 600 or higher for other SBA products. Black entrepreneurs often have lower scores because of historical discrimination in banking. When access to credit has been limited for generations, building a strong credit profile becomes tougher. Wealth gaps also matter. Collateral requirements mean entrepreneurs need assets to back their loans. Black families generally have less wealth than white families, making it harder to provide the assets lenders want. Many Black business owners relying on personal savings or help from friends and family because traditional lenders are less accessible. Data shows 84% of businesses started by people of color depend on personal savings or informal funding. Unconscious bias in lending decisions also plays a role. Even when Black and white businesses show the same financial risk, approval rates differ. This suggests that factors beyond numbers influence whether a loan is approved. For Black entrepreneurs running side hustles or freelancing, these hurdles are even more challenging. Many side businesses lack a long revenue history, making them look riskier to lenders. Freelancers often don't have the formal structure or steady income that lenders prefer. If a freelancer has inconsistent income or less than 2 years in business, SBA approval becomes more difficult. Small businesses with 1 to 4 employees face denial rates of 26%, which is 5 times higher than larger companies. Even businesses operating for 3 to 5 years still face a 29% denial rate. This impacts many Black solo entrepreneurs and small teams. Despite these challenges, there is some positive news. SBA lending to Black-owned businesses tripled between 2020 and 2024. Monthly loan counts to Black entrepreneurs reached 415 in 2024, 3 times higher than in 2020. Loan volume also more than doubled to $124 million a month. These numbers show real progress in getting capital to Black entrepreneurs. Still, the gaps remain as wide. The key is understanding these barriers and planning accordingly. Building strong personal credit, meeting all SBA requirements, and exploring alternative funding sources like community development financial institutions, minority-focused lenders, crowdfunding, or bootstrapping can make a difference. The approval rate disparities are real and backed by solid data. They are a challenge, but not an impossible one. Knowing what to expect and how to prepare can help Black entrepreneurs find ways to succeed despite these obstacles.